Monster day on the Nasdaq. I mean, we're absolutely ripping up. As you can see, we had our key supply level right about here, and we're at near the end of the day breaking through it. Now, what I will say, a lot of this momentum started at the beginning of the day from this news right here. We had our data come out, existing home sales continue to mount and continue to go. So right now we're set up for this, and again, bear with me. We're set up for this great run. We have home sales going great. The housing market looks solid. We have an expectation of a pause on rate hikes. We have this expectation that cuts are coming. Everyone has said their opinion besides one man, Jerome Powell. And it's worth mentioning the Fed hasn't spoke to us in over 7 business days, around 10 actual days. So when we look and try to digest all this information, it's important that we look at the market, but we take a step back and we realize the most influential person or tool or pawn or whatever you want to say right now hasn't even moved. So we need to be considering what's going to be happening over the next 24 hours. I'm telling you, in the next 24 hours, it's going to be either explosion in a good way or an explosion in a terrible way. And I'm going to tell you where I have my money and what I'm anticipating here in this video. Now, before we get into that content, I have to ask you to do 2 things: like and subscribe. Every single day, as you can see, I make videos for you so you are prepared. I make educational videos as well. I'll tell you the good, the bad, the ugly, and I'll tell you as an unbiased point of view. Let's get to it. Now, today, to let you know off the bat, I closed my Tesla at open at around 187.5, 188. That was my stop loss. Once you got above that level, that was a loss. I have to wait for it to update to the journal before I can show that loss and go over it. But we will here on the channel, no doubt. I promise I will. It just takes like a day to get set on there. So probably will. I might even make an educational video this weekend to go over risk to reward, talking about that trade, because I believe the losses teach you the most in the market. Now, going forward, again, I also don't want to make you even wait. I'm going to tell you right now my position that I got going into tomorrow. I did get a smaller position for IWM puts. This is a position that I did get. It's the only position that I have open, the only position I will be playing. From a daily perspective, I don't necessarily love the candle that you have here. You have a little bit of a gap up, and then you're kind of like just rejecting. It's not ideal. Definitely not something you would like to see. The 4-hour, not as terrible. And then you go back to the daily, you can see the daily and weekly, the 200 SMA are basically at the same level, right there around 181. So I like my risk to reward here right now. For myself, I'm basically just stopping on if we wick above highs, but I'll probably kind of let this one go a little bit longer just because we do have Powell speaking tomorrow. Now, again, getting some of this big stuff. In today's video, we're going to go a little bit backwards. We're going to go TA last and go over some of the news and things you guys like a lot here on the channel first. Okay, let's look at options flow. Today, no doubt that I expect to see some interesting options flow. VIX, end of the day, a really big position. Okay, 5.4 million on calls for, I believe that's June 21st. Definitely a bullish position, establishing, expecting an upside move. Probably a decent play for $27 calls. Going into SPY, what are we seeing here? Nothing great. These are more shorter dated positions. All big money has established the very large positions already, like we've gone over in the previous videos, but this is still bearish in my opinion, based on premium size and the date of these. A lot of people setting up for a bearish position in the short dated time. Qs, probably the bright spot of the market, but again, dated position, shorter dated, and then a lot of, speculative plays here for April specifically. Really interesting that they're going for April. That's riskier play, very much so. IWM, this is why I grabbed it. IWM, the past like 10 days has been nothing but bearish flow continuing to flow in heavily for April 21st, the 170s. If you just go to your broker and look at that chain, it's kind of incredible how much money's flown into that options chain. Definitely not a bullish chain. So that's why I went with this one, just because based on where we're at, risk to reward. And then even with today's movement to the upside, when we get to the charts, you'll see IWM definitely was lagging. The last one up, I'll go over SPX so you can see. Kind of a mix here, some bearish, bigger orders as well. Don't want to get too much into these. No real short data positions. So nothing I'm really excited about or looking at in particular there. Next up, I do want to cover what's happening here on Bookmap with the level 2 data. The link is down below if you want to check them out. Now with Bookmap, the biggest things I've been talking about is kind of like the path of least resistance. Now this morning and basically like for like the first half of the day, was a lot of resistance around that initial level, the initial highs that we had, right? We kind of chopped back and forth. But in my opinion, there was no reason for us to really drop today because all the expectations continue to be good, right? Everyone expects, this great Fed that's going to come out and really just comfort the market and coddle us and say, guys, you know what? We'll take it easy on the rates. You know what? Inflation, it's not that important. Okay. We'll fight that another day. I don't think that's going to happen, but that's kind of how the Fed is taking this. And so when you really look at where we're at and how we're moving, in my opinion, this was really strong. So you can see very minimal iceberg orders coming in, and then boom, here near around power hour and the end of the day, a lot of big orders. Once again, 5,100 lots. That's probably one of the biggest iceberg orders I've seen. We saw these same come in yesterday, and remember, like I was saying, those are still buy orders, so those are bullish on the market, right? So again, I still think there's a possibility to get some upside going into the Fed meeting, and necessarily looking at this, I will say, you don't have to dump, hypothetically. If we come out, you don't have to. Now, I expect us to drop with a rate hike and the tone of the Fed. I do think the Fed's going to say a few things. I think the Fed is not going to, I think they're going to say the banks look resilient, our market is robust, the things they keep saying, and they've been saying for like the past 6 months, but I think they're going to say that they have to fight inflation. They have to keep raising rates until we see inflation drop back down. Okay, core CPI was not good. PCE is next Friday, so we don't get that information before the Fed meeting, but I'm sure they'll say something about that as well, and they're going to mention jobs also. So that's where we're at. That's my opinion, and that's that right there. So let's get into some of these charts and go over a few things. Now, before we get into the charts, we've been talking a lot about banks here, so I do want to mention this. This was on, I believe, Twitter. I think I posted it earlier. So there's a little bit of confusion here. UBS set to talks with Michael Klein to terminate Credit Suisse investment deal. I believe, I forgot the bank name. It's probably right here somewhere. But anyways, so basically Credit Suisse made a deal with the bank before they got bought by UBS. UBS is canceling this deal because it was kind of a deal that Credit Suisse made because they had a gun to the head. They had to get liquidity and they were just trying to do it from any source possible. So UBS is kind of like buying that little position out and getting out of that deal. So it's actually a bullish thing for UBS and Credit Suisse because it's showing they have confidence. You can see the statement here. This is Credit Suisse talking. We assume that Klein is cherry picking. The deal was done when the selling bank had a gun held to its head and we're no longer in that position. A person close to UBS said. So again, that's like the comment that's happening there. So again, if you saw that news today, I don't really think it was necessarily bad news. I really don't. Now again, I'm not switching my tone. I still think we have danger on the horizon when it comes to the market. But I'm going to say now, right? I'm going to say, that's why I kept saying I'm not overly bearish. That's why I'm saying I'm not overly hammering positions to the downside. Why? Because you want to you want to be able to react to the news when it comes out. Now, granted, you might not, catch the tippity top, but you'll be in a lot safer position overall. So when we look at how we're moving here, again, from a standpoint, I'm not going to lie, this thing looks kind of crazy. When you really look at this chart, look at what's happened. You really held the 200 SMA, the daily on NQ, which is in itself wild because you haven't held this in over a year. So 3 times you've held it and you pushed up. And even as bearish as I am fundamentally, I have to keep saying the technicals, you don't look terrible completely. You don't look completely terrible. You still have hope. And giving you a chart of visual, this looks similar to something like Apple. Apple here on the 4-hour, you can see going back, very similar chart. Kept getting rejected from that level, mounted to 200, eventually pushed through, and we're breaking up now, right? Apple very strong. Apple probably has room. You have a daily gap all the way to 163, kind of crazy. But if things go well tomorrow, 163 will get filled. If the meeting goes well and the market takes it bullish, you're going to move up to 163, but I'm not taking that trade by any means, just throwing it out there. Right. So when we go back to NQ, you gotta be wow, this does look good. So my next level, the last thing you have to watch here is 12,953, your previous swing high on February 2nd or February 1st, 2nd. That's your main level you got to watch. That's it. That's the main level. Take a step back until 2 p.m. Eastern tomorrow when the Fed has their meeting and gives you the rate decision. That is what to watch. Also, I'll be live here on the channel so you guys can check that out, and we'll be going over the Fed meeting while it's happening. So that's what we're looking at right there. Now, next, going into ES, and again, this is something that we haven't been seeing lately. We haven't seen ES move up with Nasdaq in tangent. We haven't seen them following each other. Today, once again, you're seeing it. So like, again, I had to take a step back, and I can't say that I'm unbiased if I look at the market and manipulate or try to twist it in a sense that makes me feel good or look right? So when we look at this, you're mounted on the 200, clearly mounting. I mean, these are strong 4-hour candles holding that 200 SMA, and then you're pushing back into the next supply zone, right? Your previous swing high that you had back March 6th. Now, I will say, in comparison, where you were on February 2nd, you're much farther away on that than you are on NQ. NQ is basically there. ES, you're like 150, 180, 80 points, 80, 160 points. Sorry, I can't do math right now. That's how far you are. Like, so you still got a lot of distance. You're still playing catch up. Worth mentioning. Dow, you look a little bit better today as well, back above the 200. So what I will say is you're back above a lot of key levels going into this meeting. Technically speaking, if there was no fundamental news coming out tomorrow, I'd be looking at the market saying high possibility of continuation. Okay. But because there's big fundamental news coming out, and it's between inflation continuing or us not raising rates and kind of hoping inflation goes away, I have to anticipate, some wild behavior. And again, I don't think the Fed switches course. And as of right now, I believe a lot of people are actually pricing in no rate hike, which is just, it's crazy to me. It really is. Like, I can't believe it. And if we have no rate hike, I'll be blown away. But what have I said for the past week? If there is no rate hike and we just pause, in my opinion, you can't help but be bullish at that point. I would have to completely flip my narrative and be like, dude, look, we're bullish until data comes out bad again. Same thing as we did last time. So that's what we're looking at right now. And ultimately, that's what we're looking for. But again, I don't see Powell saying that. There's a lot of concerns across the board. And I think that he has to raise rates. And I think he has to stick to his guns. Personal opinion, don't attack me, but that's what I'm looking at there. Now, going into a few other things as far as VIX, we're going to look at a few things really quick here. So I want to look at VIX, DXY, at a request for DXY. So I will go over that as well. Now, looking at VIX, you did break below 24. We keep saying here on the channel, 24 is a major level. So breaking back below 24 is a good sign as well for bulls. So I will say that. But again, very volatile day incoming. So it's like you got to take it with a grain of salt. Again, if it wasn't such a big day tomorrow, I would say you're really, really bullish, all based around technicals. Okay. So next up, DXY. Again, there's no point in charting DXY or charting some of these things when the fundamental thesis is what's moving this. It's not moving based on technicals. Okay. Like that's it's just a matter of what it is. Like, you're not moving because, you're getting rejected or in a downtrend or anything like that. You're moving because of what's happening globally with the foreign exchange market. And so this isn't an FX channel, so I don't want to go into extreme DD on what's happening there. But again, if you watch the channel, then you understand when I talk about, when we're getting devaluing and other circumstances across the board. So I will say that right now. But the big thing that ties in this that's more important than DXY is what's happening with yields. And I believe yields are completely disconnected from the market right now. So right now we've been just dropping, obviously, since this bank crisis kind of occurred on the 9th through 10th, right? We topped out and started pushing back down the 2-year, the 5-year, 10-year, 30-year, every single yield started dumping, right? And so when I look at this, I come to with the viewpoint of I believe we have disconnected bonds and we've disconnected what's actually happening, right? So people, I think, are where bonds are moving based either on expectations of a rate hike coming, which is just ridiculous, but also too, we have to realize that if some of these banks had to offload some of these bonds at just crazy low rates and take the loss there to get liquidity, it definitely could have affected these bonds as well. And I have no data to track that, so I can't go over that. But I think we'd be dumb to not assume bonds are moving down partially because of what's happened to these banks and being in those really terrible positions. My opinion, don't attack me. That's what I think, and that's what I'm looking at. It's worth mentioning, though, the inversion is coming back up, back to 97%. This has been something that we really need to watch. If we look at what's happening with, the inversion, you're coming back to 97, back up to 1%, right? A full inversion. So I don't think you just dropped, you're out of here. I think we saw a little bit of a shock in the bond market. And I think if rates get hiked again, I think bonds start to, scale back up. It would only make sense. That's where I'm looking at. But if you do pause, I think bonds will get hit. They will start to drop. Personal opinion, don't attack me. And I think DXY will bounce as well if rates get hiked. But it's hard to assume what's happening because you have so many different noises, I guess, in the market. So the market is just going back and forth seesawing. And that's a perfect example of why VIX is barcoding in between 23 all the way in 31 back and forth for the past 1, 2, 3, 4, 5, 6, 7 days, roughly almost 8. So that's where we're at right now. Okay. My visual, what I'm looking at. If you have questions, comment down below. Would love to answer them. Again, next thing we need to be looking at. So I do want to go over a few things that I'm looking at as far as my trade with IWM, giving you a little bit of a viewpoint. If I'm looking at something, I'm going to go over here to trading view because it looks a little bit better over here. So if I go to something like the 4 hour, actually go back here, whatever. So we'll go to the 2 hour. If you look at the 2 hour here, you can see obviously we're just kind of like range trading in this zone. Very weird zone in which IWM is trading at. But what do we know about IWM lately? We know that IWM's probably been if you look at SPY, Qs, DIA, SPY, doesn't matter. If you look at them, they have one thing in common. Their chains look decent. Not terrible, but they look decent. They look okay. They don't look bad, like to the upside, potentially. But when you look at IWM, and I encourage you, go look at IWM's chain, educate yourself. Don't believe me, just do your own DD. When you look at them, I think IWM is the worst looking options chain that there is. And I think a lot of big money is betting on a risk off mentality, specifically when you look at IWM. And like I've said, I think Bitcoin and IWM were kind of giving you a really good aspect of risk on, risk off. But Bitcoin's kind of just been like churning up. And Bitcoin, I'm not going to lie to you, Bitcoin looks good. Like it really does. Clear ascending triangle. This is the 4 hour time frame, so we know it's more respected. You can see it forming out right there. Sorry, right there. I mean, it looks really good. Now, it's also important to realize if you go to the daily time frame and zoom out, you're at a massive key level, right? So we can just come in, draw that level right there. You can see as we go back to the 4 hour time frame that you're getting rejected at that massive level, okay? But you are looking at a continuation pattern trying to break up, so it's just hard to get a reality here. But what do we know also? I envision Bitcoin will follow the markets back to the downside if we raise rates again. Personally, that's my anticipation, what I'd be looking at. So again, when I look at IWM, that's why I'm trading it. It was just a low risk trade and giving you a visual, right? So looking at IWM here on the day, yeah, you kind of trended down the lows. You popped up a little bit, you had like a little bit of a descending wedge. You popped up, okay? But let's look at something like SPY. What happened with SPY on the day? Like very similar chart, but you made new highs. Qs. Kind of a similar chart, made much higher highs, right? So that's why I'm looking specifically, even DIA, you just at least double topped right there. So that's why I like IWM, is because you're making lower highs and it's just holding its value more to the downside because there's so many people going short and betting on puts there. My opinion, what I'm looking at, again, it's not a risk-free trade, but the risk reward makes sense because if the bad news comes in tomorrow, I personally believe you will very, very quickly come down to 170 and possibly break down to even lower levels. Again, this is just my opinion, what I'm looking at, how I'm trading. If you have questions, comment down below. I would love to answer them. Me or someone on the team will get right back to you when it comes to answering those questions. That's what I'm looking at there. Few other things I want to look at, NVIDIA and some of these semiconductors. Dude, these things are just monsters. Like, I can't get over it. Like, I want to short them, but I can't because you just continue to look crazy, right? So going like something like the 4 hour, you can also see what's happening here. You can see that clear gap fill. Those right there at 259. You're also at like 263 right now. I mean, your next swing high is like 288. So you still look really good here on semiconductors and you can't go short yet. Again, I think this thesis will change if rates come out higher. My opinion, I think tomorrow's video is probably gonna be one of the better videos that we have here. So definitely stay tuned. I'll have more content coming out for you. If you have questions, again, comment down below. We'd love to answer them. I had to make this video pretty quick, short, sweet to the point. Have a good one, traders.